Are buyers panicking right now because they're afraid that the floodgates are going to open when we see rate cuts? This is exactly what I'll be reacting to on this week's reaction video. And if you are looking for something to buy right now for your home right now, or just like upgrading, and you're kind of concerned about what this all means and like whether you think it'll be price increased, I've said this many times before. It really depends on what you're trying to buy and if you need to sell, because everyone's situation is different. Is there going to be some stimulus when the rate cuts happen? Yes. How much stimulus? Depends on what you're trying to get into, because we can't bucket the entire market as one thing, because freehold homes behave differently from condo homes, right? So if you want to chat about your unique situation, you can book a call with me using the link that's right here. It's www.chatwithzen.com. Simply click on the date and a time that works best for you. And then when you see the prompt, fill in your name, email, mobile phone number, and the question you have for me, and then we'll chat then. Good day, Toronto! Welcome to another episode of Prime Properties TV. My name is Zhen, and if you're enjoying some of the content I'm putting up there, do me a solid and like and subscribe. So the first and only article we'll be reviewing today is Buyers at the Gate. This just reminds me of like any, Game of Thrones hold the door reference, hold on. And house prices are expected to rise this year. Will buyers flood in when the rate cuts come? So this article, the way it's written, is already like imminently saying that rate cuts are going to happen, and that's kind of the overall sentiment, right? So that's why I made last week's video about whether you should buy now or wait until rates do cut. But if you want to check that episode out, it's over here on the little eye. So I've highlighted a couple of things here that I'm going to talk about. The first one being, this is coming from kind of like a buyer's mindset, and they're saying that I'm worried if the bank rates drop too fast, it could fire up the market and it could create a rocky flow of the home prices. And I've kind of had a lot of calls about that, and similar to what I said in the beginning of the video, it really depends on what you're trying to look into right now. And I've said this for quite some time now, in the last maybe like 2-3 months. The entry level freehold homes, 3-bedroom, 3-washroom stuff between like 8 and $1 million plus, probably going to be very hot, right? But we're talking about condos, we still have a lot of inventory right now. While it is picking up, I don't think it's picking up as much as the freehold space. So you just got to be cautious of what you're reading and applying it to yourself. So this part over here says that, experts, again, everyone's just saying that, but I don't know who experts are talking about. I'm an expert. I don't know. Who cares, right? But the idea is that we may see something in April, maybe in June. Okay, that's your spring and summer, because that's when the rate hike announcements are up. I'll pin the dates over here for you guys. But that's what they're talking about. But the fixed rates can change. I've talked about that many times before. But even if we start seeing rate cuts, I personally don't feel that the investors are going to be back, nor the home flippers. It's just going to give that sentiment boost to the people who need to buy a home for, to live in, right? So it's a lot of still end users who need to buy and sell right now. I don't think a minor rate cut is going to make the investors come back. And the reason mainly for that is because if you kind of look at this one over here, you can see that, if you go from 5% rate to 4% rate, the average amount based on the average price point is still very, very high for most people. It's nowhere near where we were in 2021 and 2022 when rates were at like 1% and 1.5% when prices before they ran up, right? So you probably need to get to like 3 and 2.5% to get down to here again, which is right here when we had the price increase. So for people to be freaking out about like dropping 1 whole percentage point and having a flurry like we saw in pandemic, I honestly don't think that's going to happen. And yes, I know realtors are going to hate me for saying this, but yeah, we're going to get an increase in sales because last year sucked, right? Or in 2023. But this year, will it be like crazy? Probably not. But relative to what 2023 looked like, yeah, it'll be good, right? So that's kind of like, again, another thing to keep in mind. So this part is actually really good. I like what they did. Basically just showed you what the interest rate announcement was. You can see rate hike, prices down, prices continue going down. And then when they had the pause in March, this was when Silicon Valley Bank collapsed, right? Fixed rates came down, okay? Not variable, prices went back up. It was one of the strongest springs we've ever had. I've talked about this many times. And then when they did the surprise hike again in June and July, prices came back down. They flattened in here, they're kind of right here. So with that being said, we're basically at one of the lowest price points we've seen except for like, 2022 in December and January 2023 around here, right? So if we lose that kind of mindset of, rates aren't going to go up anymore, then yeah, maybe prices will go up. And I don't disagree with that, but I don't think it's going to be like a roaring kind of price increase. But like if you adjust it seasonally, yeah, maybe we'll see a 5% increase. Remember, like most springs, you see like 5 to 6% increase anyways, but not because of like that, the fact that the prices are going up, but because all the big boy detached homes come out and skew the average up, right? I've talked about this many times in the past before. So Are we going to see like a crazy spring like we saw last year? Potentially, right? Because that was a really big run up. But when we adjust it based on seasonality, is it going to be a big increase? Maybe not. And is that increase going to be like, consistently going? I don't think so. Like, I think there is a lot of pent up demand on the sideline for people who want to buy their homes, and they've just been waiting and waiting for some kind of indication that rates aren't going to go up anymore, and they will buy. But I don't think there's going to be more people behind them, right? The analogy I've been using is kind of like, imagine you're trying to get into a club. The club fits 100 people, and then there's always 120 regulars, right? So, in this example, the club is the houses, right? 100 homes, and there's 120 people that want to buy homes. And the club will always let people in, but then once they get to capacity, there's still 20 people on the sidelines, right? But there's no one else behind that 120 people afterwards. So yes, is there going to be kind of like a bottleneck getting into buying the first homes once the sentiment changes? Yes. But are we going to have that steady stream of people coming through because rates are low and everyone's trying to invest kind of like we saw in the pandemic? I don't think so, right? Unless for whatever reason, everyone has money all of a sudden in a soft landing / recession to buy a home, right? I just don't think so. So one of the other things over here, I says, someone's quoting, buyers feel that at the end of the lower price right now is in sight and maybe want to capitalize on that. Buyers and sellers are collectively shifting into a more balanced market. What that basically means is that buyers are saying, hey, you know what? This is probably the bottom. Sellers are, hey, you know what? If I need to sell, I need to lower my expectation. So that's when there's more of a meeting of minds. Because last year in 2023, buyers were like, hey, rates are still potentially going up. I'm not paying more than this. Sellers are like, hey, my price is worth this because from like the prices I saw in 2022, and they weren't matching, right? But now they're like, these guys come off a little, these guys come up a little, ding, right? So there's gonna be transactions, but it's not gonna be like, things are blowing up in terms of prices, right? Now, this chart here, I thought really cool, which is the RBC affordability. And essentially what you're looking at here is that you have your condos, right? Which is the blue line. Then you got your in-between, and then you got your red lines. So the idea when you look for kind of tenants to rent, you want 3 times income, right? Because you're supposed to use 30% of your gross income to buy something. So in this case, if you were to buy a condo, it hasn't been 30% since early 2010s. And you were to buy a condo now, based on interest rates and prices, it's about half your income, which honestly, if you ask me, is actually rather normal. Like, do we prefer tenants who have used half their income for it? No. But are people being qualified at this stuff? Maybe, right? But again, this is just medium income, which means that half the people in Toronto can use 50% of their gross income to buy a condo. So is there affordable homes? Potentially by that metric. But when you go into the detached sector, it takes more than your medium household income, meaning that you have to be well above the average to afford that. And these are things that I'm going to be talking about later on next week. But you can see essentially things are getting a little bit better. You can see they're kind of like coming down a little bit. But it really depends on whether rates are coming down or not, because that changes affordability to a lot of things. But thinking about the idea of being able to afford a single family home in Toronto is probably not going to be like available for most people now looking at this number, right? Because even looking down here, right? Like for things to be affordable, going back to what they used to be, you essentially need a 30% increase in income, right? Which I don't think it's going to happen with the amount of immigration coming in, because that's deflationary for wages. Or a 30% pullback in average homes, which again, may happen, right? I wouldn't say it's a high probability because I think we've stabilized, unless again, rates spike up like crazy and demand gets pulled back out, but there's always a probability of that. Or essentially you get rate cuts of about more than 150 basis points to help with the affordability ratio. If you truly ask yourself, whether you're a bear or a bull, think about which is more likely to happen. 30% increase in wages, 30% decrease in average prices, or a 150 basis point or 1.5% rate cut. It's probably camp C, right? So that's what I'm saying. Like, is it going to make things more affordable? Yes, but not in a nominal amount, right? That's kind of what a lot of people are concerned about. Now, having reviewed this article, I'm going to show you a couple of things to give you kind of boots on the ground of the temperature of the market right now. So what you see right here is effectively me taking all the active listings for January. So right now, at the current time of filming, we got about like a little bit shy of 12,000 listings, which on average, we have about like a little bit shy of 11,000. That means we have a 10% surplus of active listings, which is a far cry from what we had in September and October when we got to like 18, 19,000 active listings, which is totally abnormal. Now, what I will say is this is very seasonal. January, February, it's always new me, new home. I want to go buy, and they start looking, but the new listings don't come out. And the ones that did come out are relist of December. So there aren't many like real new listings, right? But what we're going to see is that as rates cut and people are getting more prices, as people bid up prices because there's not much stuff to buy right now, sellers will be like, oh, hey, these guys got their price, more listings will come. And this is why I was saying, I do think there's going to be a little spurt of price run up, but then along sometimes in the spring market, it kind of levels off, right? And this is just a regular seasonal norm. So looking at this, I would say, do we have a surplus of active listings where prices aren't going to come down? I think we're just a little bit above the norm, and I think that's perfectly fine. And the amount of sales we've had in January is still very, very low. It's like around 3,100 at the time of filming. And of those 3,200 sales, about 550 of them sold over ask, which is about like 17% give or take of properties selling over ask. Now that could very much be they super underpriced the property, or they got multiple offers and went a little bit over. I didn't say what the average sold percent over is. I just said that 555 or 17% of them sold over ask, which is a decent amount for a buyer's market. That's what I'm saying. I think the demand is there. In no way, shape, or form am I saying that the prices are going to rally and rip like crazy. I'm actually somewhere in the middle right now because I still see some problems in the market, but the entry-level freehold space is seeing some action right now. And to kind of show you why, of those 555 properties, right, about 75% of them, or 3/4 of them, are freehold properties. The other ones that went over ask, like 1/4 of them, are condos. See right there? That's exactly showing you. Yes, the first-time homebuyers are maybe potentially looking at condos, but where a lot of the action and the multiple offers are happening are the turnkey, freehold, 3-bedroom plus kind of properties in the GTA, because that's where most of the buyers are gearing towards right now. So hopefully this gives you an idea of what's happening right now. And like I was saying in the beginning, if you are looking to make that move from the condo to the freehold, I think there is going to be some opportunity for a little short window because the freehold space right now is starting to gear up. But the condo side, not so much right now. So you really have to look at your own personal situation, what you're trying to do in the real estate market to determine whether these kind of broad market statements, such as the one I was reviewing today, apply to you. And if you're not really sure, you can book a call with me using the link that's right here. It's www.chatwithzen.com. Until next time, your move, your future. See ya! Now that you're done watching this one, how about this one? Or this one? You know what? Just watch them both.